Bitcoin obviously not had a great year. Bitcoin has had the worst start of the year out of any year since its inception. It's lost 31% as of today, wiped out more than $214 billion of value. So let's begin. What happened this year so far? Lyn, I'll start with you.
So in general, Bitcoin is showing risk-off behavior, kind of an early sign for the market. So it started to show weakness before the other indices. And my base case is I thought this rally probably had more legs to it, that it would stabilize a little bit better, but we've seen that that's not really been the case. And we started to get that confirmed in economic data. So for example, if you look at the past 4 major rallies in Bitcoin, so 2011, 2013, 2017, and 2020, it's coincided with rising PMIs in the United States, purchasing managers indices, basically economic expansion and acceleration. And it's generally had its bear markets coinciding with periods of economic weakness. And so as we enter 2022, the problem is that PMIs are kind of rolling over. And so we don't have a gigantic sample size to work with. It can potentially decouple from other assets, but in practice, it's been a risk-on asset more often than a risk-off asset. And so I think it's somewhat challenged here, along with other risk assets. It's kind of been correlated to like the either large cap tech stocks and particularly the ARK style kind of unprofitable growth stocks. They peaked back in February of last year, and although Bitcoin's it's given better 2-year returns than those ARK stocks, it still generally had a similar shape to a lot of them. And so it's been under pressure, I think, for similar reasons.
Just one of the little tidbits I'd love to just throw out there to investors is if you look at the April high to the low that hit in June before we ran up to 69,000. So the 65,000 high to the 29,000 low, the exact that distance, that dollar amount that it fell was just replicated as of yesterday when we went from 69,000 down to 33,000. So just on a short-term basis, again, I'm someone who thinks Bitcoin eventually is going to head lower. I think sub 20,000 is likely, but just in the near term, I do expect a bounce maybe back into the low 40s. So the couple of things that kind of bother me is, number one, you have the stock market that's only fallen now. I mean, the NASDAQ's down, 15% or so, but the S&P is not even down quite 10% as of today. And you got to think that equities, and I think Lyn mentioned this, is that you probably do have more downside. So the question is, if you see equities correlating with a certain percentage downside move on Bitcoin in a de-risking environment, does that push? I mean, we're already at 36,000. We just hit 33. It's not a stretch to think that we could flush down. And another thing that kind of bothers me is that every cycle on Bitcoin, it's been basically an 85% drop. Now, again, cycles can change. We know that. But you have to kind of say to yourself, if that 85% drop does come in from 69,000, that brings you down to about $10,000. I'm not sure if I think it's going that low, but you have to factor that into your thought process. And lastly, I'm still in the camp that the internet bubble, the dot-coms, and I traded through this. This was my beginning years of trading. It's very similar, right? You had dot-coms that were pennies at one point, like Dogecoin, or sub pennies. They would literally go up 200, 300% a day to the point where they were multiple dollars in terms of these companies. And you got this bubble. It was a new technology, just like blockchain. There was so much hype around it. And then you had this washout. And again, Amazon at that point was $100. It went to $5. So you had this massive decline. And ultimately, we've seen Amazon rip higher, right? And it's become one of the biggest companies in the world. So longer term, I mean, years out, I think it's hugely bullish for Bitcoin and Ether and these other ones. But I still think we need to see a washout of these meme coins. I mean, there's so much junk in the space. And it's hard to imagine that washout occurring unless we get a bigger move down sub 20,000.
So I generally agree we need to see a washout of a lot of the meme coins and the altcoin space broadly, anything that doesn't really have fundamentals behind it. And I think that could take the form of time or space. So if Bitcoin corrects downward, it obviously puts a lot of pressure on those usually. But also, I mean, if Bitcoin grinds sideways, if it just becomes like a bear market for like a year where it just kind of goes sideways, a lot of those other tokens drain out value. So for example, Dogecoin peaked back really early in 2021, it's off tremendously from its highs, even as Bitcoin basically had this big choppy sideways pattern, even managed to touch slightly new highs later that year, whereas Dogecoin bled out. And so I think you could have an environment like that. I think my overall base case is I'd be somewhat surprised to see a sub 20,000 print. I don't rule it out as an option though. The one way I would describe it is that, Bitcoin's had these 85% drops in the past, but also had massive blow off tops in the past. And most of the indicators show that it didn't reach the same level of exuberance in this cycle. So basically you're measuring it from a less extreme topping point. It had more of that rolling top than a huge spike. Basically, the market I think is more mature. So I would be somewhat surprised to see a sub 20,000 print. The environment that I can imagine getting there, if I would have put on my bear hat for a second, it would basically be that the Fed's tightening, or at least talking about tightening into a declining PMI environment. And if they do so when we saw Bitcoin after the prior bear market, it started to stabilize above 6,000 after hitting 20,000. In 2018, it was stabilizing at 6,000. But when you had that late 2018, Powell like autopilot, tightening into the declining PMIs, that's when you had Bitcoin collapse to nearly 3,000, right? So, and you had massive kind of liquidations. And so I basically, I think if you have a liquidity event, if you have credit markets freeze, if you have some sort of major event like that, I could see a very illiquid Bitcoin spike down. I think barring that, I'd be somewhat surprised to see a sub 20,000 sustained level.
This is the area chart here shows the 100-day moving correlation between Bitcoin and the S&P 500. Now, it would seem that just by looking at this chart, the positive green areas indicate a positive correlation, the negative red areas indicate a negative correlation. And so, like you said, Lyn, the correlations have been spotty over time. But what's interesting here is once you plot the blue line, which is the Bitcoin price, and you overlay it, you start to see when the correlations become negative and when the correlations were positive. It seems like when Bitcoin is rising, the correlations are inconsistent. But however, whenever you have a big drop in the Bitcoin price, that seems to correlate with the drop in other assets. In this particular case, the S&P 500. In other words, when the Bitcoin price drops, it's usually coupled with positive correlation with the S&P 500. Do we then say that, well, Bitcoin and the S&P 500 stocks rise independently of each other, but they always fall together, so Bitcoin really isn't a diversifier? Can we make that kind of argument?
Yeah, I wouldn't really consider it much of a diversifier in terms of basically changes over time. I think it's only a diversifier when you take into account true tail risks in the market. Basically, I think that eventually you can get decoupling from certain events occurring, but that on a trading basis, it's not really much of a diversifier because it does tend to go down when liquidity is weak and when risk on assets are in general doing bad. I consider it more of like a macro investment for its properties, its fundamental properties.
Yeah, so I mean, the relationship is absolutely, connected there. So for instance, I was starting to inch into various tech stocks the last couple of days that had been beaten down just as Bitcoin was hitting my major support on the technical basis. So it's basically, in all fairness, you're not diversifying at all when you're investing in tech stocks as well as Bitcoin. I mean, there's different degrees of tech stocks, like a Microsoft versus a mid cap or something like that. But for the most part, they're absolutely coordinated. And you have to be careful as such, because if things start to roll, I mean, it's going to roll together.